the World Economic Forum will have Ripple representing it. One of the people scheduled to attend the January 18th World Economic Forum event is Brad Garlinghouse, who is the CEO of Ripple Labs. Clear-eyed about crypto is the event's central theme, according to the World Economic Forum website, and it will also feature other pioneers from the wider financial and crypto ecosystems. Michael Sonnenschein, the chief executive officer of Grayscale Investments, and Daniela Stoffel, the Secretary General of Switzerland's Federal Department of Finance, are among the notable individuals named by inviting Ripple Garlinghouse to speak at the event. Organizers are showing their appreciation for the firm's successes and the industry's recent maturation. Seeking reasonable regulation, practical international regulation is central to the World Economic Forum's agenda. Cryptocurrency is still illegal in some parts of the world, such as China, even if there are nations with clear regulations, such as El Salvador. The World Economic Forum has made ending economic inequality and promoting prosperity for all a priority. This conversation has the ability to illuminate the current state of the sector and its openness to growth-focused rules this year. In their own ways, Ripple Labs and Grayscale Investments have battled for appropriate regulation. Even though Ripple was partially successful in its fight against the United States SEC over XRP's classification, Grayscale was instrumental in the commission's original denial of Ripple's proposal for a spot Bitcoin ETF. The firm is now worth more than $11 billion, with Ripple's cryptocurrency holdings valued at more than $25 billion thanks to the company's efforts to reclaim sold shares. Also, BitBoy Crypto brand member Ben Armstrong has revived rumors that JP Morgan is heavily investing in XRP, which are completely unfounded. But should those assertions be considered? In addition, a recent segment on Fox Business News explored the function of XRP and other bridge currencies, which has sparked a great deal of excitement within the XRP community. At long last, new motions pertaining to the remedies phase of the continuing legal struggle between Ripple and the SEC have been filed, leaving everyone with one question. Has XRP's non-security status finally ended the war? Ripple was valued at $11.3 billion thanks to the investment or tender offer. It must be emphasized that investors are limited to selling no more than 6 of their interest. This makes sure that the share repurchase program is handled in a regulated and methodical manner. In addition, Ripple has announced its desire to repurchase $500 million and has confirmed the tender offer. Converting restricted stock units into shares and meeting tax requirements will be covered by the funds. Also, in an effort to give investors liquidity, Ripple has stated its intention to regularly buy back its own shares. The company's change in plans for the highly anticipated first public offering has led to this strategic choice. Specifically, Ripple CIO Brad Garlinghouse has underscored that the company has no immediate intentions to go public in the United States. The main reason for this cautious approach, he said, was regulatory concerns. The U.S. Securities and Exchange Commission must approve the registration statement for Garlinghouse's initial public offering as stated before by the company. According to Ripple CEO, the SEC cannot support such a form as long as the company is involved in a legal dispute with the agency. At the same time, Garlinghouse explained Ripple's strong financial position in more detail. The CEO revealed that Ripple has a large cash reserve of more than $1 billion in the buyback confirmation statement. In addition, the company has a remarkable cryptocurrency portfolio worth $25 billion, with XRP constituting the biggest portion. Notably, Ripple has locked up the vast majority of its XRP tokens in its cryptocurrency holdings. The company has 40 billion XRP in escrow and 5 billion available for spending, according to records available through Ripple's API. Ben Armstrong, a well-respected figure in the cryptocurrency field, made the announcement in a string of posts on Facebook. He stated that JP Morgan has acquired more than 7.5 million XRP tokens, indicating a significant investment in the cryptocurrency. Armstrong asserts that 7.5 of JP Morgan's fortune is attributable to this transaction, having said that this computation is severely incorrect. At the moment, $4.4 million will get you 7.5 million XRP. The overall wealth of JP Morgan would be $59.4 million if $4.4 million were 7.5 the bank's value. The most recent numbers from a 2023 valuation put JP Morgan's total assets at $3.8 trillion. This is completely incorrect. Armstrong warned that JP Morgan's action should not be disregarded in his report, emphasizing its significance. he claimed that JP Morgan was quietly buying XRP, which would make the bank a big role in the cryptocurrency market. It is worth mentioning that Armstrong's accusations also brought attention to BlackRock, the biggest asset manager in the world. The asset manager, he claimed, is looking at adding XRP to its investment portfolio. This year's Bitcoin ETF was just approved. To add fuel to the fire, Ben Armstrong brought up ripples in the United States SEC's continuing legal dispute. He claims that the fact that these big organizations are taking such risky actions in spite of the legal restriction shows that they are becoming more optimistic about XRP's prospects. Given the ongoing legal disputes, it would appear that powerful financial figures are putting their money on XRP, which has lately obtained regulatory certainty, if there was ever an accumulation tendency like this. In response to Armstrong's assertions, ex-Ripple director Matt Hamilton was extremely skeptical and doubtful that the purchase in question ever took place. In the extremely unlikely event that it happened, given the availability of XRP, he cast doubt on its relevance. According to the ex-director of Ripple, 7.5 million XRP would only be equivalent to 0.75 in the total supply of XRP, which is not a particularly substantial quantity, if Armstrong's remark is to be believed. In addition, Hamilton cast doubt on the assertion that 7.5 of JP Morgan's fortune was equivalent to the acquisition of 7.5 million XRP. Hamilton demonstrated that 7.5 million XRP would not constitute 7.5 of JP Morgan's assets, but rather 0.3, using a $3.5 trillion estimate for the bank's entire assets. When asked about the idea that JP Morgan had secretly acquired such a large amount of XRP, Eminence's CTO Daniel also expressed his disbelief and laughed it off. His sense of humor was piqued by Armstrong's comment regarding the proportion of Morgan's overall wealth. The unfounded assertions were quickly disproven last year since they were based on flawed calculations and lacked supporting evidence. Influencers spread the word after they were introduced by someone trying to provide the impression of institutional adoption when none existed. Now that Armstrong's brought the story back into the limelight as genuine news, it has resurrected. Someone may have hacked into Armstrong's account, according to several people. Additionally, a prominent pro-XRP crypto influencer provided the crypto community with a clip of the enlightening discussion that was aired on a Fox Business program. It said the future of institutional purchasing was discussed by journalists and Bullseye American Ingenuity Fund portfolio manager Adam Johnson. Johnson emphasized that the banking sector still hasn't completely embraced institutional purchasing of cryptocurrencies, even though a Bitcoin spot ETF was just approved. He gave an example to show present difficulties. According to the conventional wisdom, if a Tokyo branch of Mitsubishi Bank wants to send $100 million yen to its New York branch and then convert it to dollars, it must have $100 million euro in Tokyo and an equal amount in dollars in New York. This traditional method, he stress ties up a substantial sum of money, $200 million in both currencies. Nevertheless, Johnson suggested a possible remedy. Specifically, he proposed that half of the funding could be freed up by integrating Bitcoin into the process.